Good afternoon, everybody. I'm very, very pleased today to be able to give you an update on something that we've been doing here at CSI Financial Group for quite some time now. I have had the pleasure of knowing Phil Graham, as you guys can see on the screen right now, who's the Chief Sales Officer for the Alt Group, the Alternative Group, and Phil and I go back some, what is it, almost 20 years, Phil?
Yeah, close to that now.
Yeah, it's unbelievable. And when you and I first started talking together again, you were going out, you're doing your own thing, I'm going out doing my own thing. And then I was like, hey, one of these days we got to start seeing how we can maybe be able to work together. Well, as you know, the E-State plan and our entire financial or foundational approach utilizing, estate and financial planning literacy as the key component on client acquisition. This fit in so perfectly. I was like, oh my goodness, we've got to do something together. I know we've done something probably 6 or 8 months ago, but this is an update because some of the things that Phil is going to be talking about today are things he's learned throughout his time of starting the Alternative Group, and how he's going to be able to show you ways to make you more successful and pull additional dollars off the table that you may not be taking advantage of only because you don't know about this opportunity. So with that, Phil, what I'm going to do is I'm just going to hand it over to you. I'll give my contact info at the end, but I want everybody on this call today to know that they are a very turnkey solution that is a strategic partner with CSI Financial Group. So with that, Phil, I'll just hand it over to you and let you do your thing.
Well, thank you, Carter. And you're right. We do one thing and we do it better than anybody else. And we do it 24 hours a day, 7 days a week. We don't do annuities. We don't do traditional life. We do beneficiary liquidity plans. And, the support that the CSI team has had, specifically Stacy, teeing this up for the advisors has made it seamless for the CSI advisors to plug and play and write the beneficiary liquidity plans. If I kind of take it back a little bit, after I got out of the annuity side of the business and the RIA and the broker-dealer side, I started researching what I thought was a threat to an advisor's business. And what was interesting when I was researching these threats, this is after the DOL and all that stuff, which was more of an inconvenience than anything, I came across what was an opportunity. And the opportunity is that there's $68 trillion transferring hands over the next 25 years. All these baby boomers we've been doing all this planning for into retirement are starting to phase out at the end of their life. Well, the scary part of this, so it looked like an amazing opportunity. The scary part is that most advisors admit that they do not have a great relationship with the inheriting generation. I don't know, with the E-State plan, that's kind of tying everything together on how the advisor can continue to manage the assets after the client passes away, and the beneficiary liquidity plan falls into that category as well. And so we started looking at all these numbers. Advisors are missing big by not having a relationship with the children. We got investment news. 66% of children fire their parents' advisor immediately upon inheriting wealth. Then we go into the news journal. You just inherited $1 million. Now what? Well, 66% of beneficiaries fire their parents' advisor immediately upon inheriting wealth. Well, why do beneficiaries fire the advisor? They're getting ready to inherit $500,000. They're getting ready to inherit $1 million, $5 million, whatever the number is. They're inheriting money. The advisor obviously was a big part of that. So why would a beneficiary fire the parent's advisor? Well, again, I did a lot of research. I truly believe that the death claims process is second to the fact that we don't have a relationship with the beneficiary. So when you multiply those two together, not having a relationship with the inheriting generation and the death claims process, it's a recipe for disaster. So what do we need, Carter, to start the death claims process? What piece of paper do we need to start it?
Death certificate.
You need a certified copy of a death certificate. How long does it take to get a death certificate?
Well, that's actually interesting because it just happened to me recently. Obviously, I'm out here in Arizona. We have some retail clients, as we call that. that from time to time because of our foundational approach. But I found out that it's about a 10 to 12 business day turnaround here in Arizona, which is still fairly good as the rule goes. But it's still that's just the beginning. You get that, but then you still got to do all the other why you got that in the first place to start some of those other processes for money.
Yeah, if we go to askafuneraldirector.com, the national average is 10 business days. That's 2 weeks. But right now, I pulled this last week from the Texas Health and Human Services. You can see down here, let me get my pointer out. If we do it online, it's a 20 to 25 day processing time in Texas. If you mail it in, it's 65 to 85 days. But I still like to go with the 10 business days. So if mom passes away, a couple of days go by, we file for the death certificates, it's 2 more weeks, then we file a claim. Carter, is it safe to say it might be 30 days before we get the family access to any money?
Yeah, and unfortunately, I literally had a call with an advisor today that he's like, why is this carrier, I'm not going to name any names, why is it that we requested the death claim paperwork and it's been almost 6 weeks since we've gotten it? Since we requested, still don't have it.
Yeah, and most carriers are very helpful when it comes to getting families money. But at the end of the day, they can't do anything without a death certificate and the proper claims paperwork. Now, this good-looking gentleman on the left is the artist, literally formerly known as Prince. Now, we could have a whole separate conversation, Carter, about Prince's non-existent estate plan. But for this conversation, let's focus on the fact that Prince's family is set to inherit $300 million. $300 million. And do you know who paid for Prince's funeral?
That's a rhetorical question to me, I know, but...
Well, I know, but just pretend like you don't know.
Well, all right. George Lopez.
So the actor and comedian, George Lopez, gave Prince's family $20,000 to bury him and cover their travel expenses because guess what? They didn't have any money. So, Carter, I truly believe this happens every day in America, but instead of it being Prince and George Lopez, it's your client and one of the beneficiaries is deemed more successful than the others. They get stuck paying the bills. They never get reimbursed, and now Thanksgiving's awkward. What's really ironic about this conversation is that in most families, the financial advisor is that person that's deemed more successful. And in a lot of situations, they have paid for all or part of a family member's funeral and never gotten reimbursed. So this hits really close to home personally with a lot of financial advisors. And when they really think about it, Carter, they can come up with situation after situation that their clients have been through this. The sad part, every single one of these families, Carter, were inheriting money they just simply couldn't access when they needed it most. That's what's really sad. Now, all I'm asking an advisor to do is ask their client, Carter, what's your plan for your beneficiaries to manage your expenses when you pass away? And here's what a client's going to do. They're going to do one or two things, by the way, Carter. They're either going to say they don't have a plan. My good friend Ed Slott says not having a plan is actually having a plan, is just you choosing the worst plan. Now, if the client says they have a plan, it is imperative that we ask them, tell me what your plan is. And here's what they'll say, Carter. Well, Phil, I have life insurance. Term, universal life, whole life, final expense. Unfortunately, even most final expense requires a death certificate and it's there to reimburse somebody down the road, but doesn't actually cover any of the expenses. So life insurance doesn't work. Phil, I got a bunch of money at the bank. We even set it up with TOD, transfer on death. Well, I highly recommend your bank accounts have TOD. That way we avoid probate, but that financial institution is still going to require a death certificate in order to start the transfer on death process. It doesn't create liquidity. Phil, I got a bunch of annuities. We even added death benefit riders. That adds some supplemental guarantee, but doesn't create liquidity. It's going to require a death certificate and a claims process. Well, my investments are liquid, Stocks, bonds, mutual funds, managed money, money markets. I don't care who's holding those, TD, Schwab, Fidelity, Pershing, they're all going to require a death certificate to transfer that money. I got it, Phil. My executor's power of attorney. Well, I don't blame the client because it's not their job to be the expert, but they don't realize that the power of attorney dies when they die. It doesn't work after death. So therefore, that doesn't work as part of the plan. Now, what's our solution? I'm glad you asked. It's called a beneficiary liquidity plan. And Carter, our clients love the fact that we use money they've already earmarked for inheritance. There's no need to come up with any additional funds. The money grows tax deferred, and more importantly, passes tax-free to the named beneficiary or beneficiaries. Now, here's our secret sauce. The death benefit's paid out in 24 to 48 hours without a death certificate, except asterisk, Indiana, Kentucky, Louisiana, Massachusetts. Those states legally require a death certificate. There's no health qualifications, no MIB, no pyramid, no nothing. And as long as you're not triple digits, 99 and under, you can qualify. We do cap you at $100,000 per insured. And it's a simple 4-page application, and we issue the policies the next day. Now, we talked about the big risk being that we don't have a relationship with the inheriting generation. So obviously, I'm going to pay you a commission for writing our product, but more importantly, we're going to start building a bridge to the beneficiaries, and I call it the hero bridge. I just did an interview with one of our top guys, a buddy of mine, full service, holistic financial advisor in New Jersey, and he talked about how he always goes to clients' wakes and funerals, and he was just Jerry, the advisor. He said now that he's built this bridge, he's Jerry with the money. And he says, I like being Jerry with the money. I'm the guy that shows up, and I'm the only one that brought money. And so it all comes from building this bridge. So we want the beneficiaries involved in the delivery process, not point of sale, but when you deliver the policy, whoever's involved in that, we want them either locally in the office or remotely conferenced in. We give you the claim form with the policy. You just talked about an example where it had been 6 weeks and you still didn't have the claim form. We actually give you the the claim form when we issue the policy. Now, I want the beneficiaries to understand, Carter, that we hold the golden ticket to money. That claim form is the golden ticket to money. You're the only one that can get them money, and they need to call you first when something happens to mom or dad. They need to fully understand that. Now, you just met the beneficiary on great terms because you're the guy that's going to get them money. And this is also the perfect opportunity to extend that proverbial olive branch of, Carter, because your mom and dad are such great clients of ours, if there's ever anything we can do for you and your family, even if it's as simple as answer a 401k allocation on your work account, please don't hesitate to call our office. Now, we may make them a client before something happens to mom or dad, but at the very least, we've met them, we're communicating with them, and they know who we are and what we do. Now, at death, the beneficiaries submit the claim form. The money's delivered in 24 to 48 hours without a death certificate. We want them to come into your office so you can help make sure they have all their death certificates coordinated and they have as many of them ordered as they need. And this is a big one right here. We want the beneficiaries to bring all the claim forms into your office for processing. I know that's a big part of the estate plan process, but bring all the claim forms in, not just for the accounts that mom or dad had with your office, but for every bank, financial institution, insurance company that they had. I've just inserted the advisor directly into the claims process in a positive light because we're going to help those beneficiaries get access to that money as quickly as possible, pay as little tax as possible, with the ultimate goal not only to retain the original assets, but now manage the beneficiaries' assets as well. All because we made you the hero and we paid you to build that bridge. Now, like I said earlier, we use money the beneficiaries are already going to receive. So if the client has a $500,000 net worth and we move $25,000 into our beneficiary liquidity plan, guess what? They still got $500,000. I didn't make it any bigger, and I didn't make it any smaller. They're literally going to get the same amount of money whether they do this or not. We're just predetermining how much we want them to have access to, and we tell clients, the money's still in your pockets. It's still your money. Simple 4-page application. We get into that in advanced training, by the way. Now, our average case size is $25,000. Our average issue age is a little over 70. On a standard issue, that's paying the advisor $2,400 at age 75. And on the guaranteed issue, which means the client is in a hospital, nursing home, or something pretty severe, beneficiaries and client get the same policy. They just ding us on our commission about 30%. So on a sick 75-year-old, we're still making about $2,000. Well, check this out, Carter. One application a week, one $25,000 application a week is over $125,000 of revenue straight to the bottom line. 90% of our business comes from annual reviews. I'm not asking to see more people. I'm not asking to see different people. Do your normal annual reviews and simply ask the question, and you'll make sales. And over the last year and a half, Carter, we have perfected the sales process. So this is my quick, 15, 20-minute sales presentation to get an advisor interested in what we offer. If someone is interested, we set up a 1-hour advanced sales training where we've taken every question that I know these advisors have after this presentation, and we've answered them. We talk about scripting and product positioning. We talk about objections and rebuttals. We go through not only the application, we go through the claims process so you fully understand how easy it is for the families to get the money. We do all of our licensing online with SureLC. It's super simple. And then last, but certainly not least, we do 15-minute strategy calls with the advisor. And we talk about the clients they have coming in for that week. We determine with them if any of those clients are candidates for the beneficiary liquidity plan. We talk about those clients individually. We talk about how we're going to position the product. We talk about possible objections and rebuttals. We talk about funding, where we're going to pull the money from. And we make sure that advisor is 100% ready to execute and have that conversation that week with those clients. In my 22 years of doing this and over $24 billion of annuity sales, that 15-minute call with that advisor, minute for minute, dollar for dollar, generates more revenue than any call I've made. It will literally, I guarantee you that you will make sales if we do the 15-minute strategy call. So that is our process. So if you have interest, get with Carter. Let's get you scheduled for the advanced training. Let's get you licensed. We're not going to ask you to move anything. This is in addition to whatever you already have on the books. And then we'll get you trained up and we'll schedule your 15-minute strategy calls. And I promise you that will equal business if you follow that process with us. That's it, Carter.
Well, Phil, let me just interject and just real fast, and that's everything, right? I mean, we keep it nice and simple and short around here, right? I don't know how many times we've had this same conversation, multiple times just between the two of us, but what I find, and I think you probably go through this pretty extensively, is that the ones who are the successful advisors with this understand all these things. The ones who are not successful, either one, don't ask and they don't go through that process with their clients, or they make it harder than it actually is. Is that fair?
Yes, they overcomplicate it or they don't talk about it. And I have multiple recorded interviews with very, very successful advisors that once they start asking the question and writing significant business, it's almost a joke that they're like, geez, why didn't I do this 6 months ago? They're like, I thought I had everything planned out and didn't realize I had this gap in my plan. And all I had to do was ask the question. Because, Carter, there's only two types of clients that I truly believe don't need a beneficiary liquidity plan. Only two. The first kind of client is a client that doesn't have any money. I'm not David Copperfield. I can't pull money out of my hat. If they don't have money and their family's not inheriting money, I can't fix that, okay? That's client number one. The only other
Yeah.
client number two, doesn't like their beneficiaries. We had a gentleman the other day in Chicago with a big RIA up there. He said, well, my kids are getting $1 million. I'll be dead. What do I care? They can just figure it out. Well, I may not agree with that gentleman's viewpoint, but I'm not going to argue with him. He's a client. So if somebody doesn't care about their beneficiaries, they're not a candidate. This is all about making it easy for your family on one of the most difficult days of their life. And Rick and I did our strategy call. He wrote 5 apps in the last 30 days, and we did the strategy call. He picked up a new idea, Carter, because he said, man, Phil, I wasn't using that emotional aspect. He was like, I was just using the logical aspect of there's no money available. Where at the end of the day, this truly is about how do we make it easy for the family on one of the most difficult days of their life, the day you pass away. I'm not saying they can't figure out how to get money, Carter, or they can't put it on their Amex or whatever, but why would we make them do that when we can make it easy and it doesn't cost you anything and you don't have to make any premium payments to do it?
And to your point, and then we'll let everybody else go, and I've got my contact information up here to be able to get back with me. Obviously, we recorded this. I'll be sharing this recording with everybody. But the thing about the emotional aspect of it is one thing. But this is already, and you said this earlier in the presentation, this is already money that's been earmarked for this. That was its purpose in the first place. So it sort of just makes it more painless, more seamless. So it's sort of crazy.
It's really educating it's educating the client that the money they earmarked for their family to use isn't actually going to be available for them to use, and they didn't know it. And we have a way at no cost to them to fix the problem.
Well, and imagine this. Imagine all those things you went through, the bullet points on here's what you need a death certificate for. Imagine how much more life insurance and annuities could be sold if part of the presentation was, and oh, by the way, when you actually pass away, this money will be available to you within 48 hours to your beneficiaries. Could you imagine how much easier that would be sold, or how much that would be part of the benefit of buying life insurance or annuities for these clients? But it doesn't exist.
And well, funny story, we just had an advisor in Georgia. She wrote her first application with us last week, $21,000. And she called a client that she thought would be a good fit that she hadn't spoken with in a couple years. But she's like, oh, Miss Betty needs this. Well, she wrote a $21,000 beneficiary liquidity plan. It was a free withdrawal from an annuity. And because she reached out to that client, she moved $500,000 of assets that came from having the conversation just by reaching out to the client to talk about the beneficiary liquidity plan. So I had to tell her, I was like, that's not going to happen every time. I know it's your first case. Don't get too excited. But it does happen. We find money.
Yeah, it's all about process, right? It's all about what is the client experience. And that's not just the client experience through the sale. It's also what's the client experience, and what we address is at death, because that's the inevitable for everybody, death and taxes, right? And that's what you and I, our combined forces, that's what we solve for, to make it painless, seamless, and in an already trying time to make it where there actually is money there and you don't have people fighting or potentially fracturing of families. So, Phil, anything else other than that? If not, I will let everybody get going and have them get in contact with yourself or me.
Nope, that's it. If you're interested, let's set up the hour training, and we'll go from there. Perfect.
Those are the next steps. Everybody, thank you very much. It's late in the afternoon out here in Phoenix during the Phoenix Open Week on a Monday. It's going to be crazy around here. Super Bowl. For those who are obviously working with me, you know we're huge Kansas City Chiefs fans around here, so rooting for them. But I think it's going to be one of the better Super Bowls that anybody will have seen in their lifetime, probably for quite some time. It should be phenomenal. So thank you very much, Phil, for coming on and educating and letting everybody know what the next steps are to help them help their clients, and at the same time put a little extra change in their pocket. So for Phil Grand, this is Carter Wilcoxon. Thank you, and everybody have a fantastic day.